In this presentation, we will pay payroll liabilities after processing payroll for the month of August within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We've got the open windows open. You can open the open windows, go into the view drop down and open windows list. We're going to open up our reports here, our financial statement reports, balance sheet here, reports drop down, going down to the company and financial, scrolling over to the balance sheet standard. Changing the date range up top in the customized reports to 01/01/21 to 12/31/21. That's January 1st to December 31st for the year we are working on in this problem, that being 2021. Looking at our data down here, we've got these liabilities as we saw in a prior presentation. Now we're going to go through and pay those. You would think that you could do this by just writing a check, and you could. However, if we use the QuickBooks payroll processing feature, they will go through the payment process for us and kind of give us a little bit of help, making it a little bit easier, although less transparent in some ways, to process these payroll checks. So instead of just going and making a check and writing a check to who we owe, and of course, these are federal taxes, FIT, FICA, these are owed to the federal government, the U.S. Treasury, or the IRS in essence. So that's where the check's going to go. But instead of us just writing a check for that, we're going to use the payroll system, the payroll processing system, which will write the check for us. And we'll do that by going over here to the home page. Within the home page, we'll follow along with the employee process here, where we just basically enter the payroll information, and now we're going to pay the payroll liabilities, which would be the next step. This would typically happen pretty soon after the payroll. It's going to depend on when it will be due, depending on the type of payroll we have. Usually dependent on, whether we pay monthly or semi-monthly or weekly, and how large the payroll is as to what the law will be, meaning the more payroll we have, the more likely the government's going to want their money sooner rather than later. But we're going to process it every time after the payroll in this example problem. So we're going to go to the pay liabilities here. And then we've got the date range, the from date range. It's important to note that this date range is not the date range of the pay period per se. It's the date range of when we wrote the check. So be aware of that. If we read the little tips here, it says base your dates on the dates of the paychecks you issued, not on your pay period dates. So we're not really looking at an accrual pay period dates as to when we're going to pay off the liabilities. We're going from when was the payroll processed as to when we're then going to have to pay the paychecks through the liability system. So we're going to say we processed these payrolls for the end. It was the end of August, and we paid it in the first day of September. So we're going to say 09/01/21. 09/01/21. We just need that one day there because that's when we processed the checks for the last pay period. So we're paying off that one check that happened, the one payroll process that happened here. So we're going to say okay. And if that date range is correct, we should see some numbers here. Notice if we process the payroll each time and we only choose one date, then it should show up the numbers. If they don't, then our date is off. If on the other hand, we're paying for multiple pay periods, which could be the case if we're paying, say we pay people daily for some reason or something like that, then we might have multiple pay periods where we actually wrote paychecks for individuals, and this range could reflect multiple days. But for most companies, we will be paying the liabilities sometime fairly soon after the payroll was actually processed. And so we'll basically be paying off one payroll period. We're going to do some adjustments here. We're going to say to print. We're not going to print these checks. This process will, of course, create paycheck or checks, not paychecks. They're going to create checks that we could then send out, and we then could print these checks within the QuickBooks system. We're not going to be doing that here. We're going to go ahead and review the liability checks, and what this will do is it'll actually show us the checks that are going to be generated as we go through this process. We're going to change the dates to 9/15/21. That's going to be the check date that we're going to run this on. If you imagine our payroll problem, of course, if we were doing this real time, it would be easier for us to think about the dates, but we are processing the end of the payroll. The end of the payroll period was for the month end of August. We actually wrote the paycheck for the first month in September, and now we're going to pay the liability at the 15th, the middle of the month, September 15th, paying off the liabilities that we incurred as we issued the paychecks. And so here's the date that we actually wrote the check, not the pay period. The pay period being the month of August in our case, because we're paying monthly as opposed to weekly, bi-weekly, semi-monthly. Okay, so now we just need to check off all that apply here. Now we're just going to pay off, in our example problem, the payroll tax related items, not the benefit related items. That way we'll see what goes away in terms of the balance sheet, in terms of what gets paid off, in terms of balance sheet accounts, and we'll see some that will still remain, those being the accumulation of the benefit items. So we're going to go through this information. So we're going to keep the 401k. We don't have any in the California payments. We're not really dealing with the California payments here. We're going to leave those be. And we're going to go down to the health coverage. We'll leave that be. The union, we're going to leave that as is. The federal unemployment, we want to check that off. I'm going to pay the federal unemployment. We're going to pay the federal withholding. We're going to pay the Medicare. So notice it checks both of them off as we go. It's the employer and employee portion. And there's nothing here in this Medicare for the added tax. And then the Social Security, we're going to pay that off as well. We also want to pay the California unemployment. That's the one California tax we're looking into here, because it'll be similar for all states in that they're all subject to the unemployment tax. So this is what we need to have checked off. It looks good. We're going to go ahead and process this. We're not checking off the other information that's not tax related, so that will remain as a liability. So we will create then the checks. We'll go through the review process. It'll actually show us the check. There's the one that's going to the EDD, Employment Development Department, and that's going to be the California payment that we have here. And then we're going to say save and close. And let's go to our reports once again, to the balance sheet. If we go to the balance sheet, we're going to update that. I've increased the font size quite a bit here so you can see the font here. But we have the checks, so that's the checking account is clearly negative. If we double click on it, then we'll see here's the checks to the EDD, here's to the United States Treasury checks, the IRS, the government, the Fed. So if we close this back out and we scroll back down, we see now that the current liabilities, all that is left here is the group retirement plan and the union dues and the retirement plan contributions and insurance. So those are still remaining. And that's similar, of course, to what we have on our Excel sheet if we were to do this basically with journal entries after the journal entry for paying off this information. So this journal entry will give us the detail of what happened. Now, if we want to see the detail of these accounts, these liability accounts, one report we can go to is the report drop down. It's called the trial balance. We're going to go to the accounting and taxes and go to the trial balance. Changing the date range from 01/01/21 to 12/31/21. So here is our trial balance. I increased the font size a little bit. So here we have same information, but it gives us these zero balances. And that allows us to easily go into it with our kind of quick zoom function and see what's going on with it. So we'll double click on the FIT. And we'll see that we processed FIT. So here's Anthony, Jill, Judy, Cindy, paychecks, in other words. And then here's the payment. Here's the payment happened. And here's our paycheck, which is all going to the same place. It's all going to the government. But they say that they're going to put it in different funds and do different stuff with it. And so this piece of the paycheck was for the FIT component of it. So if we close this back out, this is just going to give us the detail, the full check, just like these up here gave us the detail in terms of the full payroll by employee, even though we're really only talking about the FIT portion of it. So we're really looking at a journal entry in essence that QuickBooks has created behind the scenes when it used the payroll processing. So to really understand what's happening, we kind of have to break out the journal entry in some format. Otherwise, this detail, we get an idea of what it is, but it's best to see it in basically journal entry format. But if we close this out, we'll do the same thing with all of these. We'll see the same type of information. Here's the employer and employee portion of the FICA tax for the Medicare, hospital insurance, and then here's our two payments. They're both the same check, because if we double click on that, we've got the check for the Medicare here. So here's our detail on the check. So it'll be the same all the way down here for all these here. I'm closing this out, all these zero balances all the way down. The other place we can check is, of course, the check register. Go into the banking up top and use register and go into the checking account. We have now made these two checks. Here's the liability check. And notice QuickBooks is kind of nice. They're kind of nice in telling us this is a special check. These are all just checks, but if we just wrote a check, if I just wrote a check here, they would just call it check down here. But these ones they call a liability check, and this is they call a paycheck. And that helps us to go through the check register and really differentiate some of those transactions a little bit easier. If we see the type of transaction and we see, oh, it's a liability check, oh, it's a paycheck, then it's a little bit easier for us to see that, and we can go through here and say, oh, well, that's probably processed not by me just writing a check, but through the check system. If we double click on this little item here, it'll take us to each of those checks. For more accounting information and accounting courses, visit our website at accountinginstruction.info.